So the U.S. Fed cutting interest rates by 25 basis points. How is the market reacting to the Fed's first interest rate cut since the financial crisis in 2008? What are analysts saying? Let's go live to Wall Street. Joining us live is Angela Moon, senior correspondent for Thomson Reuters New York. Good afternoon to you, Angela.
Good morning to you.
Angela, first off, how is the market reacting to Fed Chairman Jay Powell's latest rate cut of 25 basis points? I know that there had been speculation that it would be 50 basis points.
Well, Connyoung, some major moves we saw on Wall Street today. Obviously, U.S. stocks closed sharply lower with the Dow Jones Industrial Average sinking to a triple-digit loss. That was the biggest one-day fall since May 31st. So obviously a very big move here, and the S&P and Nasdaq both losing over 1%. And this is because many investors were disappointed that the rate cut wasn't bigger and that the Fed didn't firmly signal more reductions to come in coming quarters. You know, some investors were actually out over their skies and were expecting Chairman Powell to be extremely dovish, and that didn't come from today's press conference.
Right. Let's go back to Jay Powell's remarks at the press conference just a few hours ago. He said there are really two portions to think about this. First being the U.S. economy is still looking pretty good. Data since the June meeting we know has shown that, but that they need to cut rates because of the issues abroad. What does he mean by that, really? I mean, it makes us wonder what his next step is going to be, having said that.
Right. Like you said, Connyoung, with the U.S. unemployment still at a 50-year low and inflation sort of subdued, the Fed's focus today was rather on the potential threats to the record 11-year economic expansion posed by President Trump's trade policies and the resulting slowdown in global economic growth. The rate cut today was really all about Fed's efforts to cushion the economy from the possible effects of President trade war with China. So it's really all eyes are focused on how the trade talks go with China at this point.
Right. I want to pick up where you left off about U.S.-China. Now, we got those comments from Janet Yellen a few days ago talking about the headwinds that are forming outside of the U.S. How much of that concern that we're seeing coming from the Fed has to do with this big trade overhanging, if there is in fact some kind of a deal reached between U.S. and China?
Right.
Now we know in September, could we perhaps see the Fed shift?
Well, Chairman Powell at the news conference today, after the decision was released, called the rate cut as a mid-cycle adjustment and didn't really rule out for more reductions. But he also said it was not the beginning of sort of this long series of rate cuts that we've seen during the financial crisis, because that path is only followed at times of more severe economic distress. So it's really uncertain at this point. And the one thing that we do know is that Wall Street dislikes uncertainty more than anything. So that remains to be seen. But the markets see a 71% chance in the Fed cutting rates again in September by 25 basis points. So hopes are definitely still there among investors.
Absolutely. Now, Angela, how do analysts there foresee this rate cut or even perhaps more to come in the next month, like you said, impacting the global economy?
Well, the Fed officials see tighter linkages than in the past between the U.S. and global economies. And it's prompting new questions over how high they can raise domestic rates above those in other advanced economies, which have lower or even negative rates. Some officials also believe that the lower rates are needed now to provide a boost for an economic outlook darkened by the global manufacturing swoon and a recent escalation in trade tensions by the Trump administration. So the decision is now expected to have a bigger impact on the overall global economy, which obviously puts the Fed in a more difficult position.
All right, Angela Moon, a senior correspondent at Thomson Reuters in New York. Many thanks to you for your insights today. We appreciate it.
Thank you for having me.